Welcome to another edition of the Best Business Minds, where we interview business leaders and academics that write thought-provoking books. I'm Marc Kramer, a serial entrepreneur who consults with family businesses and entrepreneurs. This is our 102nd show, and I'm really excited about today's guest, who is Jonathan Brill, author of Rogue Waves. And I know Jonathan's a really well-known futurist because I had someone from Ireland contact me today and said they couldn't wait to listen to Jonathan, that they've been following him and watching videos of him speak. So Jonathan, welcome, and we're excited to have you.
Well, thank you so much, Mark. I really appreciate it, and can't wait to get into what you've been thinking is you've been reading the book.
Yeah, and it's a super book, and anybody who gets it is really going to enjoy the book, especially as you lay out for them things that they should be thinking about themselves for their own businesses and maybe even their own professional careers as well. So let's start talking about your background and what's a futurist and how'd you become one?
That's a whole bunch of questions there. So I was hired to direct long-term planning and strategy at HP, the computer company. And I got my business card and it said futurist on it. And so that's how I became a futurist technically. But what have I been doing for the last 25 years is what both you and my mother want to know. I've been working with companies primarily to understand where they need to be in the next 5 to 10 years and the small steps they need to take today to increase their optionality and potential, no matter what happens. And what we're going to talk about today, I've done it in food and FCPG. I've done it in retail. I've done it in consumer electronics. I've done it in software. I've done it in government. These things work universally, what we're going to talk about, and they work whether you're a massive Fortune 50 company like HP or Microsoft, and they work if you're a small family farm too. So this is going to be relevant to everybody in the audience, which I'm really excited about.
So I want to know, what do you read and listen to get a clearer picture of the future?
That my experience is that if you read the New York Times and you listen to Fox News, that's one layer of the future. You can go so much deeper, and fortunately, because of what I do, I get to read the really geeky academic reports and policy papers and all of that stuff. I really like the Hoover Institution. I think has some really great stuff on YouTube and whatnot these days. I like the Atlantic Council. The World Economic Forum's another. That's actually probably a really good global resource. I'm looking at some of the names on here and realizing we've got a global audience. World Economic Forum's probably the best, easy to grok global resource. But it's really diverse, and I do a lot more digging into the economic data and digging, and going places and meeting people and seeing what's going on. In primary research than kind of reading newspapers. That's, if you want to get ahead of the future, you need to be where it exists already, and it's just not evenly distributed.
So why did you write this book, and what exactly is a rogue wave?
So I wrote this book because I realized something about business, that for the past 40 years, we've been focusing on how do we optimize our businesses? So how do we get more efficient? How do we remove the fat? And that's based on an underlying assumption that the world is becoming more harmonized, that things are getting more consistent, that things are becoming easier so we can move faster. And all of those things have been true for the last 40 years. What we've seen over the last, certainly since over the last couple of years, 4 years, but maybe since 2007, 2008, is that we're seeing a new set of complications. We're seeing more volatility in the markets. We're seeing more volatility in geopolitics. We're seeing more volatility starting in the next couple of years in technology. And so we need to look at business differently. We need to think about strategic planning differently. We can't just optimize for what we know. We need to optimize for the range of volatility in front of us. And I was just saying before we started that I was listening to your chat with my good friend Martin Reeves earlier today, and we were two peas in a pod in a lot of ways. But some of his research suggests two things that I think are really important. One is that the rate of value from innovation, or the length of time you can extract value from innovation, has dramatically compressed. The second thing that the BCG and McKinsey have been exploring over the last couple of years is this insight that the companies that plan for the longer term tend to do better in the longer term. Stunning how that works. And so the reason I wrote this book is that we don't have good tools for doing that kind of planning, unless you're a government organization and so on and so forth. So what I did was I looked at what are the range of best practices in a broad variety of planning capabilities, and I started to put those together into a single program. So your second question was, what is a rogue wave? And I think that's a great question. So we think that the future kind of works in trends, that waves slowly build, waves of change slowly build, right? I don't know if you noticed how COVID works. That's not actually how the future works either. It tends to work in spikes when radically different or when different individually manageable waves of disruption collide, right? The reason that COVID has been such a challenge isn't because of it's a respiratory pandemic. We know how to contain those. It's because a range of other things happened around the pandemic that made this one uncontainable, where previous ones over the last couple of decades have been, right? So we saw a massive increase in density of population in China, pushing out into the biome. So the likelihood of a spark, or human to animal contact, and then that density of population that you'd have transfer was becoming greater. And when that happened, we built 16 high-speed rail lines across China that enabled people to move much more quickly between cities. And between 2012 and 2019, the amount of tourism out of China increased 10 times. So they moved from an irrelevant tourism spender to the largest tourism spender on the planet. My point is, and this was happening around the world. It wasn't just happening in China. It was happening in India. It was happening in Southeast Asia. It was happening in Africa. And so the point is that these things were colliding to take something that was manageable and make it unmanageable. And that's how the future works. That's how rogue waves work. The individually manageable waves of disruption collide to create radical change.
How much of your childhood growing up in a fishing village, which I thought was pretty interesting, impacted the name and theme of the book? And tell them a little bit about your background.
Yeah, so I grew up spending time in Cambridge, Massachusetts, at kind of the Harvard world, and in a fishing village in Maine. And so I got to see two sides of the world: one, the incredibly academic elite side of the world, and the other, really people trying to survive in a community that was dying after hundreds of years up there. And it was dying because of a massive structural shift in fish populations of all things. That we'd been fishing cod more and more and more. Globalization, new technologies allowed the Japanese and European trawlers to come into these waters and just extract massive amounts of fish. And this wasn't an issue until one day when the entire cod population collapsed. And it's been 25 years trying to rebuild this population now. And the local communities that were dependent on it, they've had a really hard time surviving. Many of them moved into lobstering, catching lobster. and climate change has started moving those lobster north, so they're experiencing a second, a second massive wave of change in terms of how the local economy works, as those lobster move up toward Canada and toward Nova Scotia. And so this is the way the world happens, right? There are these long, slow waves of change, but the things that really get us aren't the ones that we have time to manage the transition toward. They're the ones that pop up seemingly out of nowhere. And the way that you understand what those could be and how you would respond to those is by looking at individual things that you know are happening today, and asking not what would happen if AI accelerated faster than we thought, or failed to, but what would happen if that was combined with an aging population that would change the needs and the availability of the labor force, and what if that was tied to a social trend like shifts in regulation, right? We have GDPR, which is the data policy in Europe, harmonized, I think 27 countries, data policy in 27 countries. In the US at that same time, I think we've built 29 different data policies across 29 different states, right? So we're seeing this radical fracturing, and it's going to be really difficult for AI to operate in the same way across all of those governments, all of those areas. And so when we look at it, my point about this is that when we look at change, what we want to look at is the range of social, economic, and technological trends in concert, not individually, because it's that collision of those waves of disruption that causes the radical change. It's rarely just one on its own, right? Very few meteors land on the earth and destroy it by accident, right? It's normally a conflagration of events.
The word chaos usually has a negative connotation, but you see it in a different way. Please explain.
Yeah. Well, I look at chaos differently than most people. So there's this guy, we all probably know him if we're business book readers, Michael Porter, one of the great strategy books of all time. He introduces what he calls the 5 forces model in that, which really talks about how, if the playing field is static, everybody competes. It's a great book for that. The challenge, of course, is in a world where the playing field is static, the winners, the incumbents have a massive advantage, right? And they win through consolidation. What I believe is that we're moving into a more volatile world, and in a more volatile world, the way that you win is by taking advantage of that, by levering into it. Now you were at Wharton, it's a finance school if I ever heard of one, and what you know in finance is that you make your money in the volatility and not in the stable times, not in the smooth seas. In 2020, the global economy contracted about 3.5%, but there was a 13% increase in billionaires. Why? Because they took leverage when they could. And that's how you win in a volatile environment, especially one in which we're likely to be more growth constrained because of structural shifts in population, because of deflationary pressures from technology and automation. That it's going to be a lot harder to grow, even though we might be running faster. So you take your advantage in the change, not in the straightaway.
Please explain the 2 schools of thought, competitive strategy and blue ocean, and why they're irrelevant today. Because, thousands of business students or hundreds of thousands of business students have been learning that, especially in their MBA programs.
Yeah. Well, I think that they're relevant in certain cases, but like both of them assume that the cheese won't move, and the only problem, if that's going back to a business book called Who Moved My Cheese, about how to plan your career. The only problem is today, the cheese looks a lot more like a hockey puck, and it's bouncing around. And so the question is, when the goals and when the opportunities keep shifting, when we're in a volatile environment, strategies that assume that the environment will be the same, or that the rules will be the same tomorrow as they are today, they don't work, they break down. And so what we need to do in these more volatile environments is really look toward the rogue waves, or if you're if you're an economics finance guy, the structural breaks, and how do you take advantage of those?
Um, you had a great example of how Carl Icahn invested a fortune and lost it with Blockbuster. Why do you think one of the smartest investors, employing the smartest minds, even one of my students was one of his top people, didn't see the change, and how many of us missed that opportunity to invest, especially in Netflix?
So purportedly, there was a conversation at the board level. You'd have to look back at the book, but I think 2006, 2007, conversation between Netflix and Blockbuster. And Netflix had proactively gone to Blockbuster and said, "Hey, we want to sell. Obviously, you've got the brand, you've got the scale, and you need to get into streaming services." Carl Icahn looked at this and he said, "Hey, what are your core competencies? Sort of classic Porter five forces." And he says, "You're a retail business, right? Your investments, your assets are in retail, your brand's in retail, and technology tends to move slower, right? Than all the analysts like to say, right? The diffusion tends to move slower. So we're going to stay, in retail." And I think he fires the CEO. The former CEO writes a nasty letter about this in Harvard Business Review, and he hires a new CEO who I think was the former CEO of like 7-Eleven. So
Yeah,
he
right.
hires a guy who knows about frozen burritos
Yeah.
to run what had to become a technology company. And they double down on exactly what you think. There's an explosion of microwave popcorn in the Blockbuster stores and so on and so forth. And Blockbuster goes bankrupt, right? Because they were assuming that the future would look like today. And Netflix becomes the top growing business of the 2010s. And that was a $50 million purchase that Icahn could have made, but he wasn't looking at the implications of change. He was looking at it in a linear way. At least that's what I believe. And if you looked at it from a slightly different perspective, you would have made probably the best investment of the last decade.
I also think finance people are one-dimensional in how they view things, which is mostly spreadsheet and not forward thinking. And you hire a lot of people like you, which is, I think, what Carl Icahn's like. He's not a visionary, he's an investor, he's a finance guy. They don't necessarily see the wave until it's kind of washed over them, and then they spend a lot of money catching up.
When I was at HP, we saw this exact thing happen. So Carl Icahn had bought into Xerox, the office printer company, and HP really, when you take a look at the business, it makes its money on inkjet printers and office printers. It doesn't, it sells a lot of computers, but that's not where the margin is. It's on the consumables.
Okay.
And so he and the CEO who used to work for him of Xerox came in and tried to force a merger between the two companies. What happened that I think was really interesting was, coming into COVID, you looked at this and you said, okay, well, he's got the money. It's Carl Icahn, right? This guy's a more successful investor than Warren Buffett, just to give a sense of scale. He's got the money, cash on hand, and this makes some sense. You put together the printer divisions, you spin out the computer divisions. This could make sense, and it would be really hard for it to not happen in a lot of ways. If the price was right. This was in December of 2019. This was going on. So going into 2020. So coming out of 2020, something really interesting happened. HP emerged effectively unscathed in terms of revenue. The stock price, I believe, was up at the end of the year, whereas Xerox's earnings per share were down 69% by GAAP, and if you trust their accounting method, something over 60%. And one of these, HP has had a long-term, successful growth of its stock price and of its revenue over the last couple of years, whereas Xerox is it's cratered and stayed there. And the issue is that one of these companies planned for the future, maintained some short-term inefficiencies, knowing that there would be a radical change, and when it did, it could take the market and it could consolidate. And that Xerox just chose to optimize and play for the short term, and this is the result. Like, Xerox would have won if the world stayed stable, but the world very, very rarely stays stable.
Yeah, my portfolio accounts for that over the past month for sure. Please talk about the 5 pillars that improve business performance, that their premises behind them are no longer true.
Yeah. So I now get to read precisely one paragraph from the book. This is fantastic. So I talk about, why is business broken? Modern business training rests on 5 great pillars that improve performance when the environment is stable. 1, scientific management, the rationalization of business activity. 2, game theory, the quantification of the best realizable strategy. 3, shareholder value, the coordination of all business activities around profit. 4, enterprise architecture, the modularization and measurement of every business process. And 5, agile practices, constant pivoting toward a broadly defined goal. These have been the major shifts in business and management theory and practice over the 20th century, whether you start with Taylor or whether you end up with people like Eric Ries and Steve Blank and the DevOps folks, Jez Humble, talking about agile practices today. And while each pillar makes sense in theory, all are based on premises that are no longer true, if they ever were. And those are that reality is as you assume it to be. In a world that's moving faster, right? Your assumptions, things that were true the last time you looked at them, likely aren't. That the future will be like the recent past. We all believe, because our only experience is our own, that we have a statistically relevant perspective on the future. It's not. There's 50,000 years of mistakes that have been made and challenges and disruptions. You're wise to look at the greater history. 3, that near-term value will inevitably create long-term value. What we saw with Xerox is that's not necessarily the case, that the rational the rational approach to rent capture is often challenged in the longer term. That shareholder value based approaches, as we're seeing with General Electric, are often challenged in the longer term. That a captain can nimbly steer a ship that is too complex to understand. Right? We've been growing these companies. You take a look at a company like Amazon, a company like Google, these massive companies, even a company like Berkshire Hathaway. How on earth can one person or a small executive leadership team really understand what's going on in the hull of their ship? It's impossible, especially with a radically changing environment. So we need to change the way we communicate through our firms. And 5, it's a best practice to wait to adapt to systemic change after it occurs. What we've discovered this year is that the companies that were ready to adapt, companies like Amazon, had radically different years than their substitutes, than their market competitors, right? Amazon, when COVID hit, they had a lot of growing pains. Everyone did. And they had a lot of sleepless nights. Everyone did. But they were able to hire a workforce the size of the Ford Motor Company in 90 days to respond to and create the logistics supply chain we needed in our country. And so my question is your company ready to do that? And I'm not saying that you can, or that you have the same resources as Amazon, or the same personnel, or the same infrastructure. But even if I waved a magic wand and I made all of that possible for you, could your company create that kind of change if the opportunity occurred? And I would argue for 95% of the companies on the planet that they couldn't. And that's a mindset issue. It's not a resource issue. It's not an assets issue. It's not a process issue. It's a mindset issue. And so if we want to take advantage of rogue waves, instead of just trying to respond to them. We need to change how we look at the world, how we look at radical change. And that's really what the book talks about is the nitty gritty of how you get into that, how you do it.
So why should you be a kayak?
So great non sequitur. I love it. When you look at volatility, right? You don't see a lot of, and I like to think of the metaphor of like class 4 rapids, whitewater rapids. You don't see a lot of aircraft carriers going down whitewater rapids. You see kayaks. And the reason that you see them is while they might be less stable, than a giant barge, when they flip, it's possible to right them faster. And in volatile moments, the ability to recover faster gives you free ocean. They again follow up on the blue ocean strategy idea. That's when you create that's when you get blue ocean in volatile times, is when everyone else is capsized and trying to bail out their boat. Not just by moving faster or moving in a different direction. It's having that room to move because you've recovered faster. And so that's where the kayak flip your kayak faster analogy in the book comes from.
And you mentioned that irrelevant changes can tell us tremendous amount about what has happened, what will happen next, and how we can make the most of it. How do you identify irrelevant changes?
We did about $15 million of research at HP that we cover in the book, in chapter 2 of the book, of the 10 major trends that we know will happen over the next decade. We also talk about what I call the rogue method, right? I'm a consultant and I wrote a book, Rogue Wave. So you've got to have, you got to have a rogue method, right? And for looking at change and how to address it. And there are really 5 steps in it. The first is reality testing, right? Making sure that what you think is true continues to be true. If you project into the future from the wrong baseline, you're going to end up with the wrong future. The second is observing systems, looking not just at the thing in front of you, but how it relates to the larger ecosystem. And then you can start to model what would happen, what inputs, what change in inputs would radically shift outputs, what might accelerate, decelerate, break. So we talked about reality testing and observing systems. The third piece is generating the range of futures. Too often in strategic planning, we say, hey, next year we're going to do 6% better or worse. But walking into 2020, this is a great object lesson. Cirque du Soleil, walked into 2020 with a great leadership team and a great plan. So did Zoom. One of these went bankrupt and one of these did 26 times growth. So the question that you want to be asking in volatile times is, what is that range of possible futures and how would I respond to that? A company like Disney that was also built in the physical world, like Cirque du Soleil, did all right. Why? Because they were diversified. They realized that they were an entertainment brand, not just a theme park brand, even though a disproportionate amount of their earnings actually, in terms of margin, come from theme parks. And so what you want to do is figure out what you really are and figure out how you could distribute that value in a range of ways. If there were Cirque du Soleil video games, if there was Cirque du Soleil on Netflix this last year, they would have been doing gangbusters, right? The next piece is around uncoupling threats and opportunities, right? How do you make small decisions today that increase your optionality and potential, and nip off? I think of it as like a decision tree. Nip off the places, the bad places that you want to go. What small decisions, what combination of decisions will get you to a good place or a great place in the future? And then the last piece is really about experimenting. So we talked about reality testing, observing systems. We talked about generating the range of futures. We talked about uncoupling threats and opportunities. And then the last piece of the rogue method is about how you experiment. Too many companies, I think, mistake portfolios of experiments for trials of a single experiment. So when you look at pharma or your stock portfolio, you're looking at, what are a couple of high risk, high payoff things, at every time horizon that you're investing against. You're looking at what are the sustaining investments that I need to make, right? So that you get those payoffs on the time horizons. And then what insurance or countercyclical investments am I making, right? So when you take a look at the investment firm that follows Nassim Taleb's approach, they did 36 times growth. 3,600% growth in March of 2020. Right. And so you can make investments like that, counter investments like that, that will backfill if your assessments of the future are wrong. And so what I recommend is that when we look at how we're investing against innovation, that we make sure that we have the right portfolio of experiments that we're doing, as opposed to investing in just one path. Otherwise, you can end up in a situation like GM is now, where they did better and better and better and better. They made better and better and better and better cars for 100 years. Mary Barra, she gets promoted because she's created an electric vehicle that goes 150,000 miles without a tune-up and blows up their business model. And then, the car blows up because of battery issues, right? They're going to have a very hard time because of the combination of a single product category and a single go-to-market motion shifting into the next generation of automobiles, because they took one path forward.
Now, we have a question from the audience, but we're going to put this aside just for a little bit, and we'll get there, because we have a question about what road wave trends in business do you see? But we're going to lead into it by having you answer some of these others, and then we're going to jump right into that. So I didn't want that person to think otherwise. How do you profit from randomness?
So I think that there are. let's find out. I think there's. I talk about the distribution. I don't see it here in the book right away, but in the book I talk about the distribution of randomness. There are different ways that the randomness can be distributed. If you think about on a casino floor, what's going on in a game of casino war versus what's going on in a game of roulette versus what's going on in at the poker table. Right. At the poker table, the winning hand is only the top valued hand, I think 12% of the time in online poker. Right. Like, so in roulette, you have a completely random 1 in 38 times chance of winning the thing. But because one's a card game and it has a limited number of cards, and the other one is you flip the wheel and the probabilities are the same every time, you end up, and I understand the concept of shoes and you can add numbers of decks and decrease the probability distribution, but just stick with poker, but just stick with me for a moment. As the cards get dealt, the probability distribution changes in poker, but it doesn't change in roulette. And so what you really want to know before you go and you choose your strategy, is what game are you playing? Your poker face won't work at the roulette table, right?
Oh, I didn't know if you were adding on to that.
No, I'm good.
Okay. You write about behavior change, and in that section you mentioned systemic institution. What is that, and how does the leader use it?
Yeah,
And can you give some
intuition.
examples?
Yeah. So the way the book, let me take a step back just so people understand the larger structure of what we're talking about. So I talk about this idea that if you want to create change in your organization, there are 3 steps. People need to be aware of the change. If you don't know you're having a heart attack, you're going to have a heart attack. Why would you change your diet, right? Same thing happens in companies. So what's going on outside that's going to cause the need to change? Behavior. Do you have the skill sets, the competencies within your organization to actually see the future, what you can know about it, to understand what you can't, and to take advantage of that? And then the third piece is, how do you create a culture that the C and ABCs of that's able to respond to and take advantage of radical change instead of just hoping that the future looks like the past. And so when we talk about building a systemic intuition of what are those changes, it really dials into that idea of the rogue method we talked about before, right? How do you reality test? How do you observe the system? How do you generate the range of futures, uncouple threats and opportunities? And then how do you experiment in portfolios? That's kind of how I think about it. And I think there's an insight here, a very specific one, for leaders who are trying to build teams to effectively plan for to create radical opportunity from radical change. And that's this is going to be a little geeky here. So if it hasn't been geeky enough, now we're about to go over the we're about to go overboard, and then we'll come back. I apologize, but in philosophy, there's a little field called epistemology. This is the study of how we know what we know, and there are really four ways that we know about the future, about things that don't yet exist. The first, and we learned some of these in school. If you wanted to learn all four of them, you'd have to have 4 master's degrees. So I'm not recommending that. What I'm recommending is that you at least be aware and make sure that you have these competencies on these teams, and you're backfilling with someone like me or someone who is bothered to go and do all that education in the places you haven't. The first is thinking like a lawyer, right? Thinking, deductive thinking. How do you, assuming that all of the facts are true and that you have the entire universe of facts in front of you, figure out what must happen next, right? How do you use arithmetic? It's basically arithmetic, right? The second is thinking like a scientist, or inductive reasoning. And so this is looking at what we know today, what statistically is the most likely thing to be true. The third is thinking like an economist. So we talked about observing systems, right? Economists do stock flow analysis and things like that all day long. And they look at complex models of nodes and links and what would happen if something up in the upper left-hand corner of your model changed. How would it impact something at the other side of the Rube Goldberg machine that you've built, whether it's your business or marketplace, climate change. That's what they do. You want someone who has that way of thinking, systems thinking in your organization. And then the last piece is what's called abductive thinking. And this is what you learn in, is a fiction writer, right? If you're a science fiction writer, you learn to think about, okay, well, what if some fact that we know to be true suddenly wasn't, right? What if gravity didn't exist? You could write a whole novel about that as a science fiction author. Or what if something new, some new radical change came to light, right? What if a meteor hit the Earth? Like, how would we respond? And you want to have that capability in organizations at a senior level. And yet in highly operational organizations, right, we take a look at shareholder value and whatnot. Guess who gets tossed overboard, right? People who talk about things they cannot yet prove. And so we need to really be thinking about, how do we improve abductive thinking in our organizations? How do we start looking at that range of possible futures? When you take a look at COVID, 8 of the 10 largest companies in America, publicly held companies, failed to identify pandemics as a risk. I have a weird hobby. I like to read SEC 10K filings, particularly the risk assessments, because I think it tells you a lot about where these thinking skills are limited in organizations. So, in a pharma company that I'm interacting with, they're really good at the first 3, right? They got lawyers at the top, they got scientists at the top, they've got people doing economics in that type of epidemiological modeling, at the top of their organization. But they're lacking, when they look at their risks, and they're doing a really responsible job. But when you look at their risks, they're failing to think about what would happen if something that hasn't existed in our industry came to light. And those are the real challenges. And because they're real challenges, they're real opportunities for the companies that choose to pay attention to them and choose to find ways that they will be of use to their customers when change happens. Because at the end of the day, it doesn't matter how good your life preserver is if you're the only boat with a life preserver.
Yeah, right. So, where do you see, let's get into the future here. Where do you see the life cycle of artificial intelligence and what industries do you think will be most impacted? Are we in the first couple innings of this or are we further along? And what industries you think are going to be most impacting? You talk about this in the book.
So in my book, Rogue Waves, we talk about 10 major waves of change that are going to collide, individually manageable waves of change that are going to collide to create the next rogue wave. And one of them is automation. And I think, a couple of years ago, there was a study by Oxford University that looked at occupational automation, right? We're going to replace all the milkmen. We're going to replace all the truck drivers or whatever. And when you take a look at that study and many of the things that said, 75% of jobs will be replaced in the next 4.3 years by AI. These were people who did not really understand artificial intelligence, but B, they were looking at it at an occupational level. So they were saying, okay, well, truck drivers drive trucks, and therefore trucks will have self-driving trucks, and so we won't need truck drivers. What they didn't do was dig down at a task level and say, okay, well, what does a truck driver really do over the course of a day? And what are the different types of truck drivers, right? A lorry driver in London who's dropping off Coca-Cola, to small stores, he does a bunch of things. He loads and unloads the truck. He builds a customer relationship with the end user. He avoids the bobbies who are trying to give him parking tickets. Like, there are a whole bunch of things he does that AI is not going to do for quite some time. And so the question when you take a look at artificial intelligence isn't like, what will it automate? What jobs will it automate? What jobs will it not automate? What industries will be disrupted? It's you got to get down to the granularity of to really understand what can and cannot be true. And so when I take a look at the industries that will be disrupted, I look at the ones not where the economics make sense, because people can always be cheaper, and the government can always backfill with food, right? So the issue isn't necessarily that AI is cheaper than people. It's where is it drive higher quality, and where are there demographic issues that will drive automation because there isn't another option, because there isn't another life preserver. And those are the things I would think about moving forward. So I guess that's not quite a complete answer to your question, but that's how to think about it.
You write about the undercurrents in the ocean and what we can learn from them in terms of how things change above the surface, that there are local micro trends like drones delivering goods to students in China. What are you seeing as a local micro trends, and how should we be planning for it?
Yeah. That's a big and great question. The challenge, and I'm gonna actually talk about how you should be thinking about them and how you should be planning for them. And maybe I could just lay out a couple of those undercurrents that you're talking about, and read them out, because I think that's a useful way of looking at it. So in the research we did at HP, we identified 10 what I call undercurrents, or what you're describing as micro trends, that are going to collide no matter what the instigating event is to shape our future. And because we talk about 10 and then there are sub-trends and so on and so forth, they really break it down into what are the economic changes, where are the technological changes, and what are the social changes that we're facing today. And so the first one is changing demographics. We see an aging population in all of the major economies, I believe now. We just had an inversion in the United States in the last year, I believe. And that's going to shift the relationship between labor and consumption. As people get older, they consume less. And as they get older, they don't go into new jobs, right? They try and sustain the jobs they have. The data economy, when you take a look at a company like Airbnb, right, it's not creating new value, it's extracting value. And so we need to look at what kinds of companies are creating new value and which companies are extracting value using digital technology. Automation. So we're seeing AI, we're seeing robotics, we're seeing an explosion of all of this stuff. And what we were just talking about was that relationship between labor availability and labor cost, right? Like the plays that go for we're cheaper than people, that's not necessarily a good play. People can always be cheaper. What you want to do is focus on where is there a labor shortage and how do we respond to that? Because those are going to be structural plays. The rise of Asia. So we hear about climate change. It's gotten more and more press over the last couple of years. But what we're really talking about is billions of people entering the US level middle class over the next 15 years. And what does that mean? What does that mean for resource availability? And as we see the shifts in geopolitical competition, what does that mean for market access? Can US companies thrive in China? It's an open question. Can US companies thrive in Indonesia because of Chinese influence? That's also an open question. Cheap money, right? So this is the last of the economic trends. So, and this was written before COVID and before we decided whatever we've decided about money printing on the planet. That we're going to see this shift, this challenge where we're using money to stimulate growth. We're looking at automation, which is going to likely have deflationary pressures. And so the question becomes, how do you drive profitability in this environment, right? Where there's too much money, there's too much access to investment, there aren't enough people to do the work. And you have the deflationary pressures of automation. Growth is going to be a real challenge. And I don't see the coordination between the central banks to manage inflation on a global scale. It's going to be a real issue. So those are economic trends, technological trends. We see emerging technologies. So AI, blockchain, the Internet of Things. They're going to drive massive efficiency. They already are. But the question is, what's the social impact, right? What's the regulatory plays? Can local governments, can national governments, can organizations like the UN constrain companies, constrain actors as all of this happens? I think it's very challenging. And so do you end up with very fractured technology infrastructure where technology in China is different than technology in the EU, is different than technology in the US? And so we're spinning our rare brain cycles, developing the same thing 3 times, or do we get better harmonization and we go back to a more rational world? The second technology issue is around the closing innovation window. So you had Martin Reeves on here the other day, and he was talking about TSR fade, the idea that the length of time that you can monetize innovation is shrinking. And as we see an explosion of IP production coming out of China, coming out of Indonesia, coming out of India, that window is going to continue to shrink as you have more competition. And so what does that mean? That you have that you have shorter, you have to do bigger, deeper R&D to differentiate, and yet you have shorter product cycles. It's going to be a real challenge. The last technological issue is really around remixing and convergence. So how do you how do you respond to this? There are 2 ways. One is, we assume that we have enough Lego pieces and that we can start clicking these things together, and the faster you click them together, the more likely you are to win. It's kind of disruptive integration. It's what companies like Amazon AWS have done, right? You can now build a complex machine learning tool in 6 weeks with 3 people, as opposed to 6 years with 300. And that kind of change has caused IBM to offload its health business, for instance, right? They can't compete with a closed system. Social changes, right? So we're seeing this conversation around digital trust. As the economy digitizes, what's a public good and what's a private good? Going into COVID, I think a lot of people said, hey, my data, my rights. Coming out of COVID, I have this interesting moral question. If my data can save 1 million people or 1 billion people, my DNA, is it mine? Or should that be the communities? It's a really interesting question. It's one that we're going to go through again and again and again over the next decade. And all of this change is going to tie to new social contracts. The social contracts that we've built in the United States and the West, they're based on the Industrial Revolution, and then a whole bunch of decisions that occurred after World War II. As we see a new global order happen, a new technological infrastructure, a post-information economy start to be built, post-industrial economy start to be built, all of that's going to be brought into question once more. And we're seeing this, very legitimately in the Black Lives Matter movement. We're seeing it, I believe it's the yellow jackets in France and the yellow umbrellas, I believe, in Hong Kong, right? This is happening globally. This conversation is happening globally. And it's going to be the major driver of change, right? How do we understand the relationship between the individual, the corporation, and the government?
So a question from the audience. In the past 40 years, US stock market has grown 40 times, while only 4 times in the past 10 years. How do you explain the change?
So so it's only grown 4 times in the past 10 years, but over the
40 years, it's grown 40 times. Why is it, not maybe growing as fast over the past 4 years, or why? Well, I guess maybe it's growing faster.
I think it's
now.
growing faster as the economy is financialized.
Yeah.
So you have, I think, what most people don't understand, and Mark, certainly, like you probably know more about this than I do, so feel free to chime in. So up until I think it was 73, Nixon got us off of gold. Is that right?
Yeah.
Up until then, you had a constrained currency that was constrained by the amount of a real resource. After that, you basically could print monopoly money. And what happened at that same period of time, we also started to issue stock shares to management of companies in a very different way. So what you had was an ability to contain all of that monopoly money within a financial economy, within the stock market, and try and keep it from causing inflation in the cost of milk. Right. And so what you've seen in the stock market is every time we stimulate, that money's got to go somewhere. If you have excess resources, more resources than you can spend, where do you put it? Into more houses? Well, we've bought all the houses we can. Into more jets. If you're Larry Page, you already have a 747. What do you need with the second one? That money goes back into investment, and the stock market's a really liquid place to put that investment. And so as you've seen more money printing since 2008, and an explosion since COVID, that's going into the stock markets. The equities are the fastest way to put it to work. Otherwise, it's sitting under your bed. And if you believe the 7.5% or whatever inflation we've had this year, you're losing money on it.
I imagine that's going to change once supply chain gets straightened out. At least how people think about supply chain. I mean, I don't think folks are going to go and reduce the prices right away because supply chain improves. but I think we'll see some kind of difference there. The next question we have from the audience, and we only have about 5 minutes, so we'll try to get through some of these questions. Future of work. How do employees train for the future in this environment? Because things are rapidly changing and your skill sets need to be growing along with them.
I think there's two questions in there, and I'll get it briefly. Like, what is the responsibility of the government? What's the responsibility of the individual? What's the responsibility of the corporation for maintaining its workforce? I think that we're going to see a shift in that as we see the population inversion, right? High skilled laborers are going to continue to be higher value. And so you're going to have to see corporations reinvesting in education in ways they haven't for the last 30 years. The second thing is really, what should you learn? What are the life skills? So we see a push toward, like all the companies are saying, we need more people who know basic programming or whatever. Well, I can't think of a skill that depreciates faster than basic programming in the age of AI, right? Like, what are the skills you should be learning? The way to think about it is, what are the skills you should be learning to get to the next job level, right? What's that minimum criterion? But the bigger thing is to learn those epistemological skills that we were talking about, right? How do you improve your deductive thinking? How do you improve your inductive thinking? How do you improve your Bayesian reasoning, thinking like an economist? And then how do you improve counterfactual reasoning? How do you improve abductive thinking? How do you think like an artist? And my goal for my nephew is to make sure that he has those skills, because those are life skills. Learning how to code is a transitory skill. You've got to get good enough at it. But unless that's what you want to do, unless you want to master that one skill, you're going to find that you, like most other engineers, 4 years in, 5 years in, are moving into management.
So is there anything stopping China from being the lone superpower, especially as the US continues to split apart due to differences in political and social views? And China has a one-person rule. Their entrepreneurial class is growing faster than anyone else's, and it seems they're focusing on making sure the gap between the wealthy and the working class doesn't become so large that it upends the country. So what do you see there?
That's a massive 3-minute question. First of all, I think we misunderstand in the West exactly how broad the voices are within the Chinese government. Yes, it is a one-party system, but there's a breadth at the more local level of perspective. I think they're doing a really good job at linking centralized planning with with market competition. This isn't the Soviet Union. This is a totally different beast. So I don't believe that they will be the one, that this will be a unipolar Chinese power. But I think that they have a very different view on what is their responsibility to their citizenry, and they're getting there. They're catching up much more efficiently than any country I can think of in history. So definitely something to watch. I do read a lot of China policy, Chinese policy. I'm really impressed by what they're doing. At the end of the day, the U.S. has a lot of guns. U.S. isn't going anywhere fast. The British lost their empire, but they haven't gone. The little island is still doing quite well for itself, and many of its colonies are too.
On the cryptocurrency side, you mentioned that dikes won't hold for central banks to stop private digital currencies. Does that mean everyone will have Bitcoin or be using some type of cryptocurrency? And where do you see opportunity for entrepreneurs?
Is that a U.S. focused question?
It could be a U.S. Yeah, it could be U.S. focused question, but we have people from around the world listening in, so that could be on a global question as well.
So the question, the way I think about it is that there are a number of levels to that to that question. The way I think about it, and can we go a few minutes over?
Yeah, I'm okay. With that, and those will stick, and those who don't, they'll get the video and can watch it, listen to the end.
Awesome. Well, thanks everybody for coming. This is just so much fun to be here and having this conversation. So, uh, when you think about digital currency versus blockchain versus uh, um, uh, fiat, which is sovereign currency versus private currencies. Um, there's been a long history of private currency. The idea that we're shifting back toward that, especially in an age where money isn't gold backed, makes a lot of sense. China certainly is, coming out of COVID, is going to try and push its digital currency hard into the countries that it bails out, right? Because there's a lot of debt coming out of this. Um, they aren't going to do their asset trades in dollars. They're going to try and do it in their own currency, and they're going to try and push their digital currency quickly into the world through that. It could be successful. I don't see a reason why it wouldn't be. Is that a good thing for the US? Probably not. In terms of will we all have Bitcoin, I think that misses the underlying issue, which is as we start to digitize the economy, do that next level, we need to have digital automated contracts, right? What we today call NFTs in our Justin Bieber videos with, you can buy the copyright to Justin Bieber videos. That's a transitory game. The real question is, what's the value of a digital contract that can be transferred automatically instead of going through lawyers and so on and so forth in courts and so on and so forth to adjudicate. So I think that's going to be a big issue. And to have that digital contract, you need to tie it to a digital currency, right? So that you can automatically trade. And you want to do that with minimum transaction costs. You don't want to have the Votro or Vostro, Nostro, accounts for international transaction. And so I think that you're going to see a lot of that kind of thing happening with digital currencies, whether it's Bitcoin or something that doesn't exist yet. Probably something that doesn't exist yet. But that's what we really need to be thinking about, is that next level of the economy, and what is the monetary infrastructure, what is the fiscal infrastructure, and what is the decision making infrastructure, contract infrastructure for doing it. And digital currency is going to be central.
Jonathan, thanks for taking the time. I loved your book. And it really gives a lot of insights on how you should think about these kinds of problems, not necessarily the direct answer about what to do, but how to go about thinking about, which is what we need to be able to do, especially as entrepreneurs who are running our own companies, and how we're going to manage to compete as the world changes so rapidly anymore. So thanks for everyone for coming on and listening today. And Jonathan, I hope you're going to write another book, and you'll have to write it faster. Can't wait 10 years because of how everything changes.
Absolutely. Everybody, go pick it up. You're going to love it.
Have a great rest of your day. Have a great weekend, everyone. Stay safe.
You too.